Hello, everyone. Thank you for joining us on this Wednesday, and welcome to this educational presentation where today I want to talk to you about a trading technique that actually works. I know you've all probably purchased or been taught some techniques in the past that were promising to give you some fantastic results, and the minute you start using them, they really don't work at all. They run rather flat. Well, this one is one that I actually use myself. You can apply it to any market, any time frame, and it really does work. For example, let's look at this chart here. Here's a chart in Meta, all right, coming into last month. Now, someone looking at this would say, well, we're in a clear-cut downtrend, right? Because we're making lower highs and lower lows. So this tells me that I should trade with the trend or look to sell, right? Well, with the technique I'm going to be sharing with you today, it actually generated a buy signal right here on this last up bar. And you could have potentially taken advantage of 35 points in just 3 days. So this is what we're going to be talking about today. The subject of today's educational presentation is a trading technique that actually works. Now, I'll explain to you the rules in this particular method today, but it's actually very simple to apply because everything is just a couple of clicks away on our platform, the BTS Primo charting platform that actually teaches you how to become a consistent trader. So welcome. My name is Steven Primo. I am the president and founder of Specialist Trading. I've been trading now for 47 years, if you can believe it. I started my trading career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. If you're not familiar with what a specialist is, if you ever Google those pictures of those old pictures of the trading floor where those gentlemen were standing behind those large wooden booths and podiums making these weird hand signals, those were specialists. They made markets in roughly about 50 or 60 stocks. And that's what I did. I made markets in about 60 stocks. I made markets during the crash of 87 and the bull market that followed. I made markets in stocks like IBM, Waste Management. And I left the floor in the mid-90s to manage money, to also trade my own account. And about 15 years ago, I teamed up with my sister site, which is Proprietary Strategies, and we developed Specialist Trading. And our one goal is simply to educate traders. That's why we say, first and foremost, we are an educational company. We're not going to tell you what stocks to buy or sell or what the perfect market is. We feel that's up to you to decide. So what we do is provide you with that information so that we can make that much more easier. And you'll see that in today's educational presentation. Now, before we begin, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results by applying this technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And once again, since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, a lot of people have often said, Steve, I love the webinars, but is there any way to get more education? Well, sure there is. You can always follow us on Twitter or X, however you like to name it. There's our handle right there, at SPCLSTTRADG. Every day I post about between 5 and 7 different snapshots of setups that our methods and strategies have generated. I also post little bits of financial wisdom, things to help you along your trading career. So lots of great free education on a daily basis. So please feel free to follow us on Twitter. Now remember, as I stated earlier, we are first and foremost an educational company. I know a lot of you have probably gone to webinars where you're hoping to find out what some guy thinks the market's going to do. Is it going to keep going higher? Is it topping out, going to go lower? What the best stock is to buy or what the best stock is to sell? What the perfect time frame is? Remember, those are all things in our opinion. The philosophy behind our education is that you have to decide those for yourself. Now, the reason I say this is because, as I stated, I've been trading for 47 years now. And the only traders that I've known that are still trading when I started to trade are the ones that make their own trading decisions. None of these traders read a daily blog or listen to the so-called pundits and gurus on TV or in chat rooms or trading rooms, or even wait to hear earnings. They have a plan in place that they know they can trust and that they've really felt comfortable with and that they simply apply on a daily basis. The ones that are constantly listening to some guy talk about some meme stock that's going to take off and then they get in and it goes straight down, or the ones that listen to someone tell you the perfect market to trade is this, those are the ones that maybe have a few winners here and there, but ultimately give it all back. In order to be a consistent trader, what I have learned in 47 years is you have to make your own trading decisions. Now, trust me, I know this from personal experience because when I first started trading on the floor, I did probably the same thing that most of you have been taught to do, right? And we didn't have trading or chat rooms then, but we had tons of newsletters. I used to subscribe to all of them and listen to what all these gurus were telling me. I waited to listen to all the guys on TV to find out what they thought of the market. I estimated what the earnings were going to be for about the 50 or 60 stocks that I made markets in to wait and see what the earnings were going to be. All these outside sources were supposed to tell me how I should trade. And guess what? For my first 2 years of trading, they couldn't make me a dime. Nothing of this worked. So I don't really think that 47 years later, it's supposed to miraculously kick in and start to work. You know, it's been estimated that 87% of all traders fail. And when we say fail, we don't mean that they're just going to have a bad month or a bad 6 months. It means that they'll give back everything they've set aside for trading. So what we're trying to do is put the power back in your hands. What I have found is that the only traders that are still around trading are the ones that make their own trading decisions. For example, I stopped looking at news over 4 decades ago. And someone could say, well, how can you still trade if you don't even know what's going on? Well, in my opinion, that's actually what kept me back. I listened to all the news and waited for all the announcements and economic reports to come out, and it couldn't make me a dime. It wasn't until I stopped listening to that I started to become a consistent trader. So these are all the things that my mentors taught me and what I try to instill in our students around the world, in over 115 countries and in every state in the United States. So as you see here, my goal is not to force feed you signals like other so-called teachers, is not to tell you what I think the market's going to do or what stock to trade. My goal is simply to teach you how to trade with the specialist edge. This is the same edge that was taught to me the same exact way when my mentors taught me, and what has sustained me now, I believe, going on 47 years. So hopefully it can do the same for you. Okay. Now, a few announcements before we begin. We have a good-sized crowd here today. Thank you all for attending. I know some webinars you may attend, you like to ask questions at each and every slide. If we do that, I have a lot of slides here today. If we do that, we'll be here far too long on the Wednesday. So what I like to do is take the questions at the end. So if you have a question, just write it down and try to remember it. I promise I will answer each and every one of them at the end of today's presentation. Now, this webinar is being recorded. If you have to leave early or if you're having technical issues, don't worry. Each and every one of you will be sent a link to this recording so you can watch it at your own leisure, okay? All right, with that stated, let's begin. And I'd like to start out by something that my mentors taught me. Remember, I struggled tremendously my first 2 years on the floor. A lot of people would say, well, how could you struggle? You were on the stock market floor. You had access to information that no one else has. At that time, you had high-speed computers. Now everyone has one, but no one else had them in the 70s. So how could you lose money? Well, it wasn't that hard. It was very simple. I was doing the same things that most of you have been taught to do. And I struggled tremendously. And here's what my mentors taught me over 4 decades ago on the trading floor of the stock exchange. They said, Steve, in order to become consistent, you need to learn how to listen to the market. Now, that went against everything I'd ever been taught because I thought I was supposed to listen to some trading guru, or I thought I was supposed to listen to the earnings or the economic report, the jobless claims or something like that, or listen to some blog or some guy in a chat room. But they said, no, none of that matters. In order to be consistent, you just need to learn how to listen to the market. And that seemed very foreign to me because I thought I was listening to the market. And I would venture to say that most of you think that you're listening to the market as well. But let's look at a chart here. Now, someone would say, well, yeah, I'm listening to the market. It's going straight down, so I know it's probably shouldn't be bought. It probably should be shorted if I'm an aggressive trader. And I should stay out of the way if I don't want to do anything with this because it's in a downtrend. So just when you think the market is headed in one direction, then this happens, okay? So what happened to listening and knowing what the market wanted to do, okay? The trouble is the market is speaking its own language. It doesn't speak the same language we speak. It doesn't speak the language of earnings. It doesn't speak the language of meme stocks. It doesn't speak the language of support and resistance. Those are all things we've added to it and made up. It has its own language that we rarely know how to listen to. But here's the good news. We need a translator. We don't need to actually learn how to decipher what it's saying. We just need something that can translate what it wants to do. And the good news is that there is. That translator is the PET D. Now, if you're new to my webinars, you haven't heard me speak about this before, but for all those people I see in here that have come to my webinars before, The PET D, I'm sure you know about it. The PET D is a tool I learned some 4 decades ago on the floor of the exchange. At that time, we used to call it the formula because it was so sensitive, we had to calculate this formula on a tick-by-tick basis using a hand calculator. And so we couldn't figure out what was happening intraday. We could only use it as an end-of-day indicator. But now, with high-speed computers and with programmers, we've developed it into a color bar tool. So we've taken all of the hard work out of it for you. There's nothing you need to do other than just apply the PET D. As you see here, let's look back at that chart in Zion. How could the PET D have helped us? Well, the PET D is a color bar tool. It only displays 2 colors, red for when the market is being translated that it wants to go lower, and green when it's translating the market wants to go higher. So all you have to do on our platform is click on the PET D, and you see that it automatically colors the bars either red or green. Now, most traders would figure out that, okay, we're going much lower down here. But look we knew well in advance, because the bars were already colored red, that it wanted to go lower. And most traders would figure out by this time up here that, okay, I guess it's going higher. But we knew with a series of green bars that it wanted to go higher down here. Now, the PET D is not a strategy. It's not a system. It doesn't pick tops or bottoms. It simply translates what the market wants to do on a short-term basis. So this is going to help us with the technique, okay? Here's the trading technique I'm going to share with you using the PET D. And remember, everything is as simple as one click away on our platform. It's that easy. We developed and designed this platform, ProTrader Strategies and myself, to make trading simple so that you could become a consistent trader. Remember, it's all about listening to one thing, the market, the chart in front of you. It's not about trying to decide for, well, is this good news or is this bad news? I can't tell you how many times I was following a stock when I was trading on the floor and some terrific news came out and it went straight down, right? We've all been there before, right? Or terrible news came out about the market or about the economic indicators, and the market went straight up. So we want things that are cut and dry, that are black and white, that are just yes and no. And that's what all of our methods are. Very consistent and very simple to follow. And they're about one click away on our platform. Excuse me. Okay, so let's go through the basic rules. Let's look at this chart right here in Oracle, all right? Question mark, like which direction is this going? You say, well, Steve, we're supposed to listen to the market. If I'm listening to the market, it's telling me that it doesn't know what it wants to do, right? It's just going sideways. Well, that's not really true. We need the help of a few simple tools that you can easily access anytime, anywhere. For example, here's what we tell our students. Every student, it doesn't matter if they're a hedge fund trader, they've been trading for 50 years, or if they've been trading for 50 minutes. Everyone learns the same basic rules. And the first thing we tell our students is to apply the buy-sell line. This tells you whether you're going to be a buyer or a seller. Now, on our platform, we made it simple. We put it right here in the green strategy tab, right on the far left. You click that on, and the buy-sell line you actually have access to right now. It's the 50-period simple moving average. But we use it differently than most people. We tell our students that, listen, it doesn't matter if you're trading a 5-minute chart, doesn't matter if you're trading crypto, doesn't matter if you're trading forex currency pairs or a monthly chart. All you have to do is apply the 50-period moving average and ask yourself, where is price in relation to that? If price is above, that's telling us that the overall trend is up. So price above the 50-period simple moving average tells you the overall trend is up. This means we will only be a buyer. We're never going to try and short anything if price is above the 50. We're only going to look to buy. I don't care if somebody says, oh, this stock is terrible, it's overbought, you've got to sell it. If it's above the 50, the odds are in your favor that you will do better looking for buy setups. Now remember, this is not a system, this is not a strategy or a technique. This is just telling you what side of the fence you should be on. So this is the overall trend. But what about the short-term trend? Now, do we have to look at a smaller time frame? We're looking at daily charts here. So we go to an hourly time frame, a 15-minute time frame. Should we look for a moving average crossover? Should we add some other type of really convoluted logic to figure out what the short term is? No. All we have to do is apply the translator, the PET D. On our platform, it's as simple as clicking on the PET D and the colors automatically appear. Now remember, red means that the short term is down. Green means that the short term is up. So if the overall trend is up, as we stated earlier, and we see red bars, that means the short term and the overall trend are out of sync. But we want to wait for them to get back in sync. So green colored bars tell you that the short-term trend is up. When you have the short-term trend and the overall trend in sync, that is a buy setup. It's that simple. So what you want to do is look for the PET D to be out of sync with the overall trend as it is here, because red means it's going down in the short term. And if price is above the 50-period moving average, means the overall trend is up. So they're out of sync. But on the first bar that's in sync, that's your buy signal. Here, they're out of sync again, right here. But on the first bar that is sync, that's your buy signal. Here, on the red bar, they're out of sync again. Here, there's a buy signal. So you have 1, 2, 3 buy setups right there. Now remember, most traders would have looked at this chart and said, Steve, okay, I'm supposed to listen to the market. The market's telling me it doesn't know what it wants to do. It's going sideways. But now that you learned how to listen to the market, we haven't put anything in here like earnings or jobless claims or economic reports or what some guy says in a trading room. We're listening and basing everything off of what the market is telling us. That's when you've learned to finally listen to the market. And guess what? The stock went up 20 points in the next week, okay? Now, isn't it funny how it gapped up here? Probably based off some news, right? But we didn't know that. All we did was listen to what the market was telling us. If you had waited for that news to come out, well, you could have bought here, but how big would your profit have been in the next week? Wouldn't you have much rather bought here based on what the market is telling you? Remember, as my mentor said, the reason why you're failing is because you're listening to outside sources, the things we were all taught, myself included, but they don't have a high level of consistency. You will have a higher level of consistency if you learn how to listen to what the chart in front of you is saying, rather than these outside sources. Here's another example, okay? Once again, in Union Pacific, we'd say to ourselves, well, I can't really tell what's going on. Maybe we made a bottom right here. It looks like we made a bottom and we're going back up. That's the only thing I can tell from the chart. Well, sure, if you look at it the way most people are taught how to look at charts, yeah, that's your reasonable analysis. But what's the first thing we do? We apply the buy-sell line, click it on, 50-period moving average. And now ask yourself, where is price in relation to that? Well, all the closes are below. So once again, price below the 50-period simple moving average tells you that the overall trend is down. Are we going to be a buyer of this if the overall trend is down? Absolutely not. The odds will be in your favor that you will do much better if you are in sync with the overall trend. Okay? So therefore, we're only going to be a seller. That's step one. Now, step two, we want to find out what the short-term trend is. So we use our proprietary indicator, the PET D, click that on, and it automatically changes the colors of the bars, either red or green. Now, we see here that when we have red bars, that's telling us that the short-term trend is down. So the overall and the short-term trend are down. They're in sync. But what happens when we have a green bar right here? That's telling you that the short-term trend is out of sync with the overall trend, because the overall trend is telling us the market wants to go lower. So this is out of sync. What we want to do is wait for the first bar that's back in sync. And that's our sell signal. That's this bar right here. The first red bar means that they're back in alignment once again. So that's our sell signal. Red colored bars tell you that the short-term trend is down. And when they get back in alignment, that is your sell signal. So rather than saying, well, Steve, I thought we bottomed out here. It looked like a reversal. We're starting to go up. We listened to the market, and the market fell out of bed 10 points, okay? You see now how you have this higher level of consistency once you are in sync with the market because you're listening to it rather than an outside source. Here's an example in JPM, okay? JP Morgan. Once again, what is this doing here? Well, we apply the 50-period moving average, and we see that the overall trend is up. So even though it hasn't done anything yet, we should look at this from a buyer's perspective. We apply the PET D, and we see that we have some green colors, some red colors. What we want to do is look for out of sync, which is right here. The red is out of sync with the overall trend, and for the first bar to be in sync. So that's a buy setup right here. Here we're out of sync, the first bar to be back in sync. So we have two buy signals. And this was coming in February, and look what happened coming into April, up 35 points. Another example in Apple, okay? This was coming in March, all right? Hey, Apple looks like it's going higher, right? Well, not really. Even though it's rising, we're looking at this from a seller's perspective. Why? Because the overall trend is down. We are below the 50-period moving average. Now, we apply the short-term trend, that's the PET D, and we wait to see every time we're out of sync with the overall downward trend. So we're out of sync here. We got back into sync right here with the first red bar. We're out of sync here again. We got back into alignment. So we have two sell signals where everyone else thought, hey, but Steve, look at, we had a really nice up day here. It looks like we're going higher. That guy in that chat room says this is going to make new highs. Well, we listen to the market, not to people in chat rooms. You won't find chat rooms at Specialist Trading. That would be doing you a disservice. We want to teach you to make your own decisions. So here you would have decided that, well, based off what the market's telling me, not off what I'm saying, but what the market's telling you, Apple should be sold, and it fell 20 points, okay? What happened to the uptrend? As we look at Meta, this was just about a month ago. We're above the 50-period moving average, so the overall trend is up. Even though we've been coming lower, that's okay. We don't want to sell this. We don't want to short it because the overall trend is up. We'll have a higher level of consistency if we're in sync with the overall trend. So we want to see what the short-term trend is. We apply the PET D, and it was in sync here, but here we're out of sync. So we're out of sync here, and we wait for the first bar to be back in alignment, which is right here. We have the overall trend is up, and the short-term trend is up. The first bar after being out of sync, that's our buy signal. And guess what? You could have made 35 points potentially in 3 days, okay? What if you had shorted this and you were short the whole time? Well, guess what? You would have given it all back in just 3 days. Remember, think of it like the slot machines in Las Vegas. If you sell above the 50 or if you buy below the 50, sure, every once in a while, there's going to be an amazing trade. And you're going to say to yourself, well, gosh, how come this guy, Steve Primo, says not to do that? Because this is an amazing buy signal, an amazing sell signal. They really work. Well, sure, they're just like the slot machines in Vegas. They're designed to give you a win, a nice little jackpot every once in a while, because they know if you stay there long enough and continue with those terrible odds against you, you're going to give all your money back. And it's the same way with buying below the 50-period moving average and selling above. Sure, you may have a little jackpot here every once in a while, but if you continue to do that, take it from someone who did for my first 2 years of trading, you're going to wind up giving it all back. There's no consistency. We're trying to put the odds in your favor and give you an edge. The best edge we know of that you can start applying right now is to use the 50-period moving average, what we call the buy-sell line. Now, if you don't believe me, go back and look at your last 10 or 20 trades. I can almost guarantee you that the reason why you had losses was because you were out of sync with the 50-period moving average. You were buying below and selling above, okay? Let's look at some more examples here. Let's look at this next one. All right, we are below the 50-period moving average in Boeing, okay? So obviously, we don't need news to tell us that this is going lower because the 50-period moving average is telling us. Well, people would say, well, aren't you following the news in Boeing? Why? We're below the 50-period moving average, so I know I'm not a buyer. And then if we want to go short, well, we apply the PET D and we wait to see when it's out of sync, okay? And we had numerous times here when we were out of sync. We were in sync because the short term was red, but here on this bar, we're out of sync. We got back in sync here. And then we were out of sync here with the green up short term, but then right back here on the next bar, we're back in alignment. So we had a couple of chances to go short. And we all have seen what happened in Boeing. The stock quickly fell about 25 points. Now, what happened when it started to bounce again? A lot of traders would say, hey, it's bottomed out. Look at this. We have a bullish engulfing pattern. Look at this reversal day right here. But where are we in relation to the 50-period moving average? We're still below. So we're going to look at this as a shorting opportunity. Now, we see that we're in, we're in sync with these red bars, but out of sync right here. And then we got back in alignment on this bar. Then we're out of sync again and back in on alignment on this bar. So we had 2 more chances to go short. Either we could have covered here with a nice 25-point gain or stayed short and maybe got short some more. Either way, you could have potentially captured upwards of 35 points. Not having to look at news at all. This is the market telling you what it wanted to do well in advance of any news. All right, we look at this chart here and we're saying to ourselves, well, sure, GE was going straight up ever since, whoops, hold on a second here. I think I lost the chart. If you'll bear with me. Here we are. I lost the chart there for a second. Hold on. I think it's, for some reason, we're losing the, oh, I see what we're doing. We are on the wrong mode. There we go. Okay, let's get back to the chart. There we are. Okay, we just switched charts here. All right, we're looking at GE. And we say to ourselves, okay, this has been going straight up, but most traders love to play the victim game. Like, oh yeah, Steve, it's easy to see that this was going up, but how would I have known in advance, like well back here? You know, I would have liked to know way in advance that it was going up. Well, we don't have any predictive tools. We're just relaying what the market is telling us. So if we apply the 50-period moving average, what was the market telling us way back in November, December of last year? It was telling us it wanted to go higher. Why? Because the overall trend was up. We were above the 50. This was all without, having to look at any earnings, having to look at any market indicators. You just apply the 50-period moving average. You say to yourself, well, at least I know GE wants to go higher. There's nothing I need to do in terms of analysis. Now, if you want to trade it, apply this technique. We apply the 50-period, the PET D. And we see here that look at all the chances we had to go long. Why? Because we were out of sync, back in sync, out of sync, back in sync, out of sync, back in sync. So there's never any reason why you have to play the blame game. Like, oh gosh, the market's rigged. All these guys with the big money have they all can get all this advanced information. That's silly. That's a loser's mentality. If you know how to listen to the market, you see these examples happening all over the place. All right, once again, looks like the market's doing absolutely nothing in UNH, right? This was just last month, going sideways, right? Well, it may be appearing that it's going sideways, but once we apply the 50-period moving average, we say to ourselves, well, how could we have taken advantage of this? Well, we were below the 50-period moving average the entire time. So if you were long this stock, this is why traders fail, because you're long a stock that's below the 50. Even though you say to yourself, well, it's making a ledge, this is major support, okay? So it's holding, then how well did it hold? All you have to do is apply the 50-period moving average. Then if you want to actually use this technique, well, we see here there were numerous times we were out of sync, back in sync, out of sync, back in sync. So you could have sold it and potentially grabbed 45 points. See, trading is simple when you let go of all this useless, what my mentors called useless noise that really has no basis for helping us to become successful. Things like earnings, things like news announcements, things like economic reports. They really don't help us. They really, if anything, they're stumbling blocks to our success. What we have to do is learn how to listen to the market, because after all, it's the source of what we're trading, right? This is the very thing we're trading. Why not listen to it instead of somebody on TV telling us what they think? Let's look at Cat Tractor, okay? 65 points you could have potentially captured using the same technique. And 100 points you could have potentially captured looking at Charter. Same technique, below the 50-period moving average, so the overall trend is down. We are out of sync, back in sync right here. So that's a sell signal. Out of sync, back in sync. Two sell signals, two chances to go short, potentially capture 100 points. Now, we've looked at daily bars. Let's look at some other time frames, okay? Here's a weekly chart of Costco. Once again, looks like it's doing absolutely nothing, right? Going sideways. But we apply the same principles, the 50-period moving average or the buy-sell line on our platform. You see how simple it is on our platform. Everything's pre-formatted. And even though it may appear as if Costco was going sideways on a weekly time frame, it actually is telling us, well, sure, I may be doing nothing right now, but the overall trend is up. So if you're going to do anything, look at this from a buyer's perspective. All right, so if we want to apply this technique, we apply the PET D on our platform, just click it on, and we look for the instances where it goes out of sync. So if we're above the 50, the overall trend is up. If the bar is red, the short-term trend is down, so that's out of sync. We wait for the first bar to be back in sync right here. That's a buy signal. We wait for another bar to be out of sync and then back in sync, another buy signal. So we had two chances to go long last year, Costco, right here and right here. And coming into April, The stock was up nearly 250 points. So if you're an investor, you can use the same principles here as I taught you for daily bars. Here's a weekly chart in BIIB, Biogen. We're below the 50 period, so the overall trend is down on a weekly basis. We apply the PET D, and we're out of sync with the green bars, but back in sync with this first red bar. So this is our sell signal in Biogen. This was in January of this year. Stock fell 50 points coming into just about 3 or 4 weeks ago. You see how this can help you? If you're long a stock right now, the 50-period moving average is worth its weight in gold. How about a monthly chart? Okay, here's the Boston Beer Company, SAM, all right? Doesn't appear to be doing anything, but it's above its 50-period moving average. So listen, it's telling you the overall trend is up. If you're doing anything, you may want to look at this from a buyer's perspective. We apply the PET D. We're in sync the entire time. We want to look for the first out of sync, which is right here, a red bar that's out of sync with the overall trend. And now we want to identify the first bar back in sync. That's this green bar. So here was our buy signal in 2020, February of 2020, 4 years ago. Would you have liked to have applied this? Potentially could have captured 980 points, close to 1,000 points. This technique really works. This is what we were talking about. This is a trading technique that actually works. How about a 5-minute chart of Apple? That was a monthly chart. Let's use the exact same rules to a 5-minute chart, okay? How could we have taken advantage of this really nice upward move about 3 weeks ago in Apple, all right? Same principles apply. First thing we do is apply the 50-period moving average. You see how this works with any market? So right here, we knew well in advance that the overall trend is up. We're not going to be shorting Apple. We don't care about any news announcements that come out. We don't care about what the market's doing or what some guy's saying in a chat room. You're looking at this from a buyer's perspective. Remember, you have to make your own trading decisions, not someone in a trading room. And then we apply the PET D. Every time the bars were green, they're in sync with the overall trend. But every time they're out of sync, they're red. So we wait for the first green bar. There was a buy signal right there. You could have had potentially 10 points in just one day, but we had some other chances. Another buy signal here, another one here, and then still another one here, and another one here. Look at all the chances you had to intraday trade Apple. Had you taken that first signal, once again, that was potentially capturing 10 points in just one day. So ask yourself, as we go into the end summary here, we're nearly halfway through 2024. I can almost guarantee that the majority of you in today's class are nowhere near where you thought you'd be when you made those big promises to yourself in January, right? This year, I'm going to do great. I'm going to make that extra money to take that dream vacation, or maybe I'm going to make that extra income. Maybe I'll have that addition onto my home. Are you anywhere near there? Most likely you're not. That's okay. As I said, over 80% of all traders fail. But do you think this PET D technique can help your trading to get back on track for the remainder of the year? I think your answer is yes. And because of that, we have a great attendee discount for you, all of you taking time to watch this presentation. We're going to offer you our roadmap for success. This is the PET D trend detector, okay? Our roadmap for any market. It's our proprietary color bar algorithm. You're going to also get 2 continuation trading techniques, as well as 2 pullback trading techniques, along with a trailing stop technique. So you'll not just be able to apply what I taught you today, you'll get a host of other different ways to trade this. There are literally dozens of ways to apply the PET D to your trading. Remember, you can apply it to any market, any strategy, and any time frame, okay? Now, everything you saw today was displayed using our platform. It's really simple once you use this with our platform because it's one click away. You can watch this on your platform unfold and just click it on and see if there's a setup right there. Here's what we're going to do for all of you attending today. Till Friday only, if you sign up for the PET D course, we're going to throw in a full year free, absolutely free of the platform. But here's the best thing about that offer. You're not only going to get 12 months free, there is a host of other tools, techniques, and methods on the platform that you won't find anywhere else. These are things I've accumulated in my 47 years, mostly from the floor, from the trading floor, that you won't find on the major platforms. They're only on the PTS Primo charting platform. There are literally dozens of techniques, most of them you've never heard of. Now, you're not only going to get the PET D, you're going to get our enhanced buy sell line, 4 different ways to use the 50-period moving average, our strength of trend tool, telling you when a trend is running out of steam or it has more gas left in the tank, Our signal scanner, you can scan for these PET D setups if you like. Auto-generated exit levels, and over 90 of the most prominent technical indicators with personalized tech support. This is just the tip of the iceberg of what you're going to get. But on top of that, you can scan for any market you like and other time frames. For example, let's say you're a forex trader. Well, you could have scanned for this setup on the 4-hour Canadian dollar using the exact same rules that I shared with you. Remember, we are above the 50-period moving average on the Canadian dollar. We are out of sync here. We're back in sync right here. So here was our buy signal. And look what happened. 200 pips in about 3 days. That's roughly about $2,000 on average per unit. That was a 4-hour chart. Here's a weekly chart of gold. Okay. Remember, we're not looking at any economic indicators, not looking to see what the economy is doing. We're only listening to one thing, the chart in front of us. We're using our translators, the 50-period moving average for the overall trend and the PET D for the short-term trend. Now you say right here, well, there was a buy signal. We got back in sync. Here was another one. And look how gold took off, XAU USD, spot gold. Okay. Now, I know a lot of you are saying, well, I really don't need this. I can kind of see where this technique is taking place. Like, for example, this is probably a buy setup right here. Okay. Yeah, it's probably, we're probably going to buy and go back up. So I would buy based off what you taught me. Most likely the PET D is turning this green. And most likely, this is going to take off and go back to these highs. After all, that's what that guy in that chat room said. So he must know what he's talking about. So I don't really need this. Okay, well, what if you had taken this setup? This was just about a couple of months ago in ZTS. How well would you have done? Remember, over 80% of all traders fail because you're listening to outside sources. You're not listening to the market. Had you done that, you would have listened to the market and seen that, well, you were first below the 50-period moving average. Remember, you never want to buy anything below the 50-period moving average. And secondly, in order to buy this would have had to have been green and above the 50, but look what color it was. It was outlined red. So the market translators were telling you in advance, you should never buy this, and you would have saved yourself a lot of money. This is why the majority of all traders fail. And by fail, I mean they give away their entire nest egg for trading. It's because you're listening to outside sources and outdated information that really doesn't show any sign of consistency. Trust me, I traded with these same things most likely that you're using probably close to 50 years ago, and they weren't making me any money then. So I don't understand why anyone would think they're going to miraculously kick in and start to trade. Over 80% of all traders fail because of this one thing. They're not listening to the market. The good news is our job at Specialist Trading and Pro Trader Strategies is to provide you with this great information and consistent method so that you can listen to the market, learn how to, and then make your own trading decisions. So this was the theme today, not to trade the same way you have been and going down that losing road, but to trade a technique that actually works. So take your trading to the next level. Become a student of the PET D course. Here's the great discount we have for all of you attending today. All right, here's our roadmap for any market. You're going to get the PET D along with all these different techniques, along with that trailing stop technique and educational correspondence as well. Now, usually the PET D course and the application would cost you close to $5,000. Now, if we added a full year of the platform, we're talking close to $6,200. But here's the discount we have today. We're not going to charge you anywhere near that. What we're going to do is give you two options. Firstly, if you'd like to buy in full and have the platform, we're going to only, for a limited time, charge you $39.95. That's a nearly $2,200 savings, okay? But if that $39.95 is still a little bit too rich for your blood, guess what? Pro Trader Strategy says they will accept payment plans for a limited time. This means that you don't have to pay the $39.95. For a limited time, you can put a fraction down, just a fraction down of that price, and establish a payment plan with them, and you can be up and running as early as today. And guess what? Which either way you decide to go, pay in full $39.95 with that great discount, or establish a payment plan, you can still get the full year free of the platform. So this is a great, great way to turn your trading around. You don't have to come up with $39.95 if you don't want to. You can come up with just a fraction of that and still be up and running. Okay, here's how to take advantage of this great discount. Remember, this is for a limited time only. Contact Pro Trader Strategies. They're my sister site. You can reach them at 310-598-66 77. They have trading consultants manning the phones. They would be happy just to give you a quote. You don't have to purchase anything. There's no obligation. So don't feel intimidated or pressured like, well, if I call, am I going to have to purchase today? No, you don't have to. They're there to work with you. They give you a quote or answer questions concerning data, concerning the platform. Okay. Now, if you'd like more information, the info page link is on the bottom, but that's not a live link. They've posted a live link right there on the platform. If you go to the chat box, you'll see a live link posted there. So just open up that chat box icon and you'll see a live link there. Okay. Now we have a few more minutes left. I promised I would take each and every one of your questions. So if you do have, here's the time to ask me, just go to the chat box or the question and answer box there, the little icons, and I will answer them to the best of my ability. Someone is asking, how do you know when and where to exit? Well, that's all taught in the course. Remember, we teach you different techniques, where to exit, where to enter. That's all taught in the course, as well as a trailing stop technique as well. I can't give away all the information. You know, I've given you all the rules to this one technique, and I just can't give away everything. It wouldn't be fair to the thousands of people that have already purchased the Pet D, and then they would say, hey, why did I buy this when I see you're giving away all the information for free in a webinar? So that's all included in the course. We give you all that information, okay? Let me see if there's other questions. How long is this offer good for? Well, usually the offers are good for a week, because each and every week I give a free webinar, and we talk about a different promotion, a different strategy or method. So we're going to get the video to this, where you can watch this, once again, this webinar at your own leisure. If you're really interested, watch the video, get a better idea, and you can most likely say to yourself, after seeing the examples, again, you'll say to yourself, wow, this is really promising. I would love to take advantage of this offer. But if you wait, the way some students have done in the past, over a couple of weeks, maybe even a month, and say, okay, listen, I'm ready to take that offer, most likely the price will be back up to, I believe it was $6,200 or so. So why do that when you can pay either a one-time fee of $39.95 or get the payment plan for just a fraction of that, you know, a discounted, way discounted price, less than $500, most likely you could be in, and establish a payment plan, okay? So this is a great offer, but don't sit on it if you're really interested, okay? Someone says, I'm not a really experienced trader. What if I have problems with this or I can't understand everything? Don't worry, each and every one of you, regardless of how long you've been trading, this is the most probably popular question I get. And don't worry, if you've been trading for 20 years or 20 minutes, everyone gets my private email address, okay? And you all can ask me questions whenever you like. So if you don't understand, or if you don't feel you're implementing the Pet D correctly, or if you don't understand it, you can contact me whenever you like, during the weekends, prior to the opening, after the close, during the market hours, and I will answer as quickly as I can. Sometimes sooner than later, but you know, I get a lot of questions and a lot of things sometimes, so many times I have to wait. Okay, but trust me, it is the easiest thing and the next best thing I know to sitting next to you. You can always contact me, and it comes straight to me. It doesn't go to assistant, doesn't go to a salesperson. My personal email address, I am the only one that sees the emails, okay? So it is very private. Where is the video webinar? Well, we're still in the video webinar, so you're going to be receiving it as soon as we conclude today, okay? Someone's saying, I want this if it makes money. Well, remember, you are responsible for how well something does. There are so many students that say the same thing. Will say they'll purchase something and they'll say, well, Steve, you promised me that there was very consistent and I haven't made any money yet. And then I asked to receive a lot of their trades and see what they did. I can almost just tell you point blank that the reason why traders lose in the beginning is because you didn't study the rules, you didn't watch the course or read the course properly, and you got in too quickly and you're losing money. So when you say, I just want to make money, I want to make money, it's up to you how well you do, how well you implement the trading requirements, how well you do this. You're in charge of your success, not me, not someone else, because that's why we say everyone should be in charge of their own trading, okay? So remember, all of our webinars, I don't know, some people say they just got in here. We sent out tons of videos and information. All of our presentations start at 10 o'clock Pacific time or 1 o'clock Eastern, all right? If you just got in here, remember, every Wednesday we do this, but you won't see this presentation again for a long time. So this is very, very important to watch the video. You'll each get sent a link and to watch it again and again if you're really interested. But remember, if you wait, as some people have done in the past, the price will be probably twice as much. So don't sit on it if you're really serious in becoming a successful trader with the Pet D, okay? Okay, this brings us to the end of our presentation. No more questions. I just want to say thank you so much for taking time out of your Wednesday. I know you have a lot of things to do. You could be trading, and I really appreciate it. Just remember, if you decide to become a student of mine, I'll be there with you every step of the way. If you feel like I haven't been trading long enough, don't worry. Everyone starts somewhere, and I'm known for being hands-on with my students. So I'll be there with you every step of the way, but we make things simple so that everyone can take advantage of its simplicity. When you learn how to listen to the market, it is so much easier and simpler to trade than it is when you're trying to decipher, is that a good earnings report or is that bad earnings report? Is this good news or bad news? See, that's all subjective. We want things that are simple, that are cut and dry. If price is below the 50, you look at this as a seller's point of view only. If price is above, it's a buyer's point of view. That's it. So it's very simple, cut and dry. There's no room for subjectivity. It's very easy and simple, and I'll be there with you every step of the way, okay? As we take one last look at our disclaimer, thank you so much for attending today. Thank you for taking the time out of your day, but most especially, I look forward to all of you becoming students of mine in the Pet D course. Thank you so much. I wish you all the best of luck in trading, and I look forward to becoming your mentor. Thank you so much. I'll see you next time. Bye-bye.